Something historic is happening. You can sense it. It's just beyond what you can see. It's beyond what you can feel. Just outside of your vision and your understanding. But you know it's there. It's the reason we're all in this room. That thing that we sense is the beginning of the fourth industrial revolution. And it has begun. The first industrial revolution took place in the 18th century. It was the beginning of machines and the move from farming and rural living to urbanization and industrialization. In the late 1800s, we moved into mass production, the invention of electricity, in the 1980s, the third industrial revolution began. It was about digitization, about computers, and it enabled much of the life that we know now. Now, we've begun the fourth industrial revolution. It builds upon digitization, but it includes communications and connections. It's about embedding technology in the very fabric of society. We're starting to see technology embedded even in humans. Appreciate the kind introduction. I'm Martin Saint at your service. It's nice to see all of you in the room. As was mentioned, I had the pleasure of teaching the first blockchain, cryptocurrency, and financial technology classes ever on the continent of Africa. It was done right here in Kigali at Carnegie Mellon University. I came here in 2013 and have had the pleasure of seeing every single one of our graduates go through the program. And it's a personal enough program that I can still recognize and greet them all by name. I very much appreciate that. I get to do some work with the International Telecommunications Union. I'm head of their Africa study group on mobile financial services. And I've spent a long time working not only in technology, but in finance. I began doing financial market analysis and training in 1981. Had a long career in finance and a long career in telecom. And the thing that those two industries share is that traditionally they have both been on the forefront of the implementation and use of technology. So it's actually quite gratifying to see them come together now and actually merge into what we call FinTech or financial technology. And that's exactly what's going on. It's part of the fourth industrial revolution. It involves the use of other technologies, but together, we are going to see a change in society that has not been experienced in our lifetimes. And we're going to be part of that change. So let's begin with the idea of applying these to a single African market. It might surprise some of you to know that the idea of a single African market is not new. In 1980, the Organization for African Unity, which was the precursor to what is now the African Union, met in Nigeria and drafted the Lagos Plan of Action. The plan called for, among other things, equality in African trade relations. 11 years later, with little progress under that agreement, African leaders met again and signed the Abuja Treaty of 1991. This treaty also had the goal of a single African market. 38 years later, this has yet to be implemented. In 2018, here in Kigali in May, they held the Transform Africa Summit. The theme of the summit was accelerating Africa's single digital market. And herein lies a clue about what might be different this time about a single African market. The word digital. The Continental Free Trade Agreement was signed during that conference in May of this year. 45 of the 55 African countries have since ratified the agreement. And the agreement is intended to enable the exchange of goods and services between countries. The digital transformation that is happening across the world, and especially across Africa, is the enabler of the single digital market. It's what's different this time from the previous attempts. And a number of technologies that we refer to under the umbrella of financial technology are going to be what enables that single African market. Now, the idea of a masterclass is that we take a small group of experts, master students, and somebody gets to walk through a little bit of a discussion with them. And we talk about the important concepts and ideas that might go into a topic. So we have an intimate group of, I think, around 300 seats. So we'll see what kind of discussion the 300 or so of us can have. But let's start by talking about financial technology. What is financial technology? A very simple definition might be innovation in financial services using modern technology. It's not a very complicated definition. It's almost just a restatement of financial technology. It doesn't tell us a lot about what it is. And it sounds new, like something we never had before. But in fact, for a long time, especially in other parts of the world, we've had automatic teller machines, credit cards, debit cards, electronic commerce, online shopping, online banking. So really it's not new. As I said, telecommunications and finance were actually some of the earliest adopters of finance. But in Africa, financial technology is actually starting to move ahead of the technologies that are used in more developed countries. We have less legacy infrastructure, and that's enabling us to implement innovations at a faster pace. Many of you I know have used Jumia to order products and services, or AliExpress. Maybe you buy cosmetics through Kasha. You use Yego or your Tap and Go card for transportation. And these are all forms of financial technology. Africa is more familiar with what is and what will become the financial technologies than any other part of the world except Asia. We almost lead the curve. And there's opportunity there. Yet there's an estimated 2/3 of the African population that's access to, for instance, financial services. In Kenya, M-Pesa enabled people to access formal financial services that were never available to them before. Other companies like Flutterwave in Nigeria are building upon this idea, enabling commerce and payments across Africa. Where there isn't infrastructure, they'll build it. 2 or 3 weeks ago, I was at the launch of the Electronic World Trade Platform with President Kagame, Jack Ma from China. They want to enable small producers, and they use the example of coffee farmers, to sell products and services made in Rwanda in China. Think about the infrastructure that requires. You need a way to list those products, to get them to market, to ship them, to transact in different currencies, to get paid, and to do this all securely. And one of the most interesting things that Jack Ma had to say, because he was challenged, he said this is a place without good roads, without good transport infrastructure, without good addresses, without access to formal financial services, in some places without good communications. They asked him how he was going to overcome those challenges. And he said, oh, it's no problem. It was exactly like that in China when I started Alibaba. He's not afraid. What doesn't exist, he knows will get built. Financial technology includes more than just things like automatic teller machines and credit and debit cards. It's more even than just electronic banking. We can also say it includes new financial technology companies that are offering new ways to make payments, to send money, to buy insurance, to access loans and credit. It means we can diversify and automate things from contracts to regulation. It means we can utilize the Internet of Things. We can use data science as a way to interpret information, to gain insight, and to drive decisions. It means we can make payments and transactions in digital currencies. And along with all of these digital technologies, we need cybersecurity to ensure that we have safe, private data and transactions. So how does FinTech really enable a single African digital market? Let me talk about a couple of examples. Imagine a shipper sending goods to a receiver in another country. They need to arrange a contract, insurance, transport, customs and clearing, and payment. These things are primarily done manually now on paper. And remember, if we move across borders, we typically have different regulations that need to be followed in the different countries. Imagine how much easier it would be if the rules were harmonized. Imagine if we could automate the process. The shipment could be tracked via the Internet of Things, and this could reduce the risk for the shipper and the insurer. Enabling events could be triggered based upon the location of the shipment. It could be automatically cleared at the border and duties automatically paid. Digital documents could be submitted in advance, and the customs agency could receive an automatic notice when goods cross over the border. The agreement between the shipper and the receiver could be captured as a smart contract. What that enables is for the shipment to be automatically tracked when it arrives at the receiver's warehouse, the contracts of the term or the terms of the contract automatically checked, and payment automatically made in digital currency. Imagine the efficiency that could be introduced if we can do this. Shipments could be done less expensively, more quickly, more easily. In economic terms, we're reducing friction. In practical terms, we're making it easier for people to trade. Our markets no longer have to be local. Anywhere in Africa is our market. Let's think about another example. If you have a relative in another country and you want to make a money transfer, right now if you go through a bank, you have your own bank in your home country. To transfer money, your local bank will need to go through the country's central bank. The central bank in the sending country will need to transact with the central bank in the receiving country, and funds will need to flow through that central bank to the receiver's local bank. Each one of these banks needs to keep a separate record, a separate ledger of this transaction. And there's a reason why, when we send money, it takes 3 days or 3 weeks, and the fees are high. Each one of these entities has to reconcile the entries in their ledger and ensure that they agree with the other parties in the transaction. But imagine if we could have one centralized ledger that everyone trusts. A transaction is entered one time, and all the entities have access to that transaction and can trust that the transaction is exactly as recorded. Now we have one ledger to keep up. That's going to be more efficient. It's going to reduce the cost and the time that it takes to transfer money. And these are the type of things that are going to enable a digital African market. One that is efficient, one that is accessible to everyone. This still really isn't a complete definition of all the things that might make up financial technology. But I wanted to touch upon some of the things that our Carnegie Mellon graduates are doing. Very soon we're going to hear from our distinguished panel. It includes Kevin Rudahinduka, who is head of digital banking at Bank of Kigali. Bobson Rugamba, who has begun a financial technology company called MVend, helping to serve the financially underserved. He's a technologist, he's an entrepreneur. We have many other students working in banking. Zigama Bank, Equity Bank, Atlas Mara. And we have a number of our graduates that are working in software development, making financial applications, banking services. We have a team of CMU students currently working on a blockchain-based savings and credit cooperative solution for automating and expanding SACCOs. One of our graduates is working at IBM Research, currently in Nairobi, on a project called Twiga Foods. It enables microloans on the blockchain for small agricultural vendors. We also have another team of our graduates that have started a company that provide data science analysis and dashboards for companies that want to make better decisions with the data that they collect. We have another group of graduates working at a company that tracks sustainably mined minerals using the blockchain and can provide provenance for those minerals from the time they are mined until the time they're incorporated into electronic devices by manufacturers like Apple and Samsung. We have another team working with Leaf Global Financial Services to enable digital identity and money transfer for cross-border refugees. One of our graduates is head of IT for the East Africa Commodities Exchange. I also have a student that is currently doing a project that applies data science, artificial intelligence, and machine learning to algorithmic trading in financial markets, something I've been doing for more than 30 years. It might not surprise you, that's my favorite of the projects right now. And we're talking about finance. But a lot of the things I've just talked about look like they fit in with the specializations offered at Carnegie Mellon, don't they? Software development, networks, data science, Internet of Things. They're technology specializations, but we're applying them to finance. And we saw that more than a quarter of our graduates currently work in financial services. And I'm not sure where you'd put someone like Bobson, because he works in financial services, he started a company, he's got a number of other accomplishments. We have a pretty diverse and talented group of students. What's clear from all of this is that technology is enabling new opportunities, access to larger markets, and greater efficiency in trade. What's also clear is that human capacity and education are required to work with these technologies. Bankers were not traditionally technologists, but as banking becomes increasingly digital, all employees will need a deep understanding of the applications of technology. Increasingly, the process of developing banking technology is starting to look very much like the process of software development. Now, what about lawyers? I mentioned the idea of a smart contract. A smart contract is essentially computer code. It takes an input, it performs a function, and based upon the inputs, you get an output. But what happens if there's a dispute in a smart contract? We're going to need people that understand not only the law, but the language that the contracts are written in. And that language is computer code. I often tell my students that they need to develop their core engineering skills, but they'll find throughout their jobs and careers that they actually can't get very far without running into business, economics, policy, and law. Because a lot of engineering decisions are driven by these external factors. But increasingly, it's becoming the other way around as well. Jobs that were not traditionally technology-based are starting to require an understanding of technology. There will come a time when it will be hard to practice any discipline unless you know the technology behind it. We've been talking about something called FinTech, financial technology. But even government regulation is undergoing a similar transformation. It's called RegTech, regulatory technology. Insurance, we have InsurTech. Even in medicine, we have MedTech. And it's not just about patient care, but there's going to be a time when we can enable digital identities for patients. It's going to give them access to electronic health records, registration, and even insurance and payments will all be automated. So if there's one thing you take away from this evening, let it be this. The world is undergoing a massive change. The fourth industrial revolution has begun. There is no place in the world where it will have more impact than here in Africa. And you need to be ready.